The Russell declined 3% in yesterday's session. For more on what's next for the small caps, let's bring in Chris Retzler, portfolio manager of Needham Small Cap Growth Fund. And growth, you have a fund that's based on growth. Is that the concern right now that hit the markets yesterday?
So I think what hit the markets yesterday was, some of the concerns in growth and, where is the economic numbers going? What is the Fed going to ultimately do here in September? I think what we're going to probably see there is maybe a quarter point, which would be a better result versus a 50 basis point cut. In that, if they did 50, I think we're going to be looking at something more serious. But, growth is certainly under pressure, and we're seeing it, coming out in some of the share prices.
But in the meantime, you point out global economies are slowing. That we probably will see some weakness in the labor market that we started to see already. So that could happen on Friday. So you think that the risk is not to inflation being rekindled? Do you think it has to do with worrying about the economy slowing too much?
So I think what we're seeing with companies is, top line, revenues. So one company's cost cut is another company's revenue. And so our company's able to manage that margin and revenue throughout the rest of the year. We think that the economy still needs to slow and will continue to slow. And whatever interest rate cuts come in, it's going to take a while for that to filter through.
Just you think it'd be good for growth for small caps, the interest rate cut. So why don't you want 50 then?
Well, I just think that if we do 50, it's probably the Fed is looking at a much more serious, dire situation that's out there.
What caused the 50? Not that the 50 wouldn't be 50 would be helpful for small caps, probably.
Certainly. I mean, on a valuation basis, when you look at the cost of capital and the ability to get out there and raise funds, whether it's in the fixed income market or in the equity capital markets, that would certainly be a positive, but I don't think the initial reaction would be that positive.
Overall, September is not great for stocks a lot of the time. We've had, I think, 7 out of 8 positive months. So September might not be a positive month, and it could lead into something, maybe a better buying point in October, which has happened so many times in the past. We see lows set in October.
Yeah, so what we saw in early August was, a significant correction. We then had a rebound, and we may begin to test some of those lows. I don't know if we're going to go as low as where we went in August, but it's certainly a concern. Volatility's in the market. We're coming into a geopolitical, headline risk, period. You're also going to get into tax loss selling, and so if there is losses out there, I think as we get into the end of October, where mutual fund taxes tend to be year-end, we could see some further selling on that front. So I don't think you need to run out there and buy the market, after yesterday. I think there's probably some more volatility and tough days ahead.
If your money manager has some tax losses for you, I think you should get a new money manager.
This year?
Yeah, for this year.
Did you see some of those ETFs, by the way, the AI ETFs that people have been buying? Yeah, totally underperforming.
Really?
Yeah, it's like the opposite.
Because it's not just NVIDIA.
Bingo. Yeah. It's a fascinating article in the Wall Street Journal about it yesterday.
So instead of buying one of those funds, you should have bought NVIDIA.
Yeah.
Maybe you should buy them now, though. Someday, you might think, right?
Chris, layer the election into this, too, because there is the potential for some pretty big changes, either on tax basis or on economic policies based around that. What do you anticipate seeing in the market as a reaction to whatever may be coming?
So we had the summer surprise of a change in one of the candidates. And so if you were lining up thinking here was what the tax policy could be going forward, I think it's a lot more unknown right now as to what those tax policies could be. I mean, there's talk of, taxing unrealized capital gains, which would, quite frankly, be a disaster for the, markets. So
even the idea of raising the capital gains, even raising some other taxes, that is probably far more likely to happen more quickly.
So you may pull forward some of the realization of those cap gains if people are looking at their tax brackets. So again, it's just more uncertainty. The market doesn't like uncertainty. So what are you going to do? You're going to probably compress multiples down and wait until you have that, certainty, in November, or maybe we don't know till December. I mean, from the past elections, you don't always know. But again, you're in a headline period where I think candidates are going to put out their positions, and then what likely gets done, is probably a lot less. But there's also regulation, what policies you're going to have. Are you going to continue forward, with some of the stimulus dollars that are still going into the CHIPS Act? You've got the, infrastructure spending, broadband build-outs. Are any of those things going to be at risk if there's a change in, administration or within, the Senate or Congress? So all headline risk, and I think it's really hard to determine right now what the outcome's going to be.